Hey, welcome everyone, and hope you had a really good weekend. Let's quickly go over the market, and I'll share four setups I'm watching for the week. Real quick, I'm not a financial advisor. My goal is that you learn from these videos, apply the concepts, and then practice the levels. And even if you don't get into a trade, good educational information. You can buy shares, you don't have to buy options. And my goal is to just look at the setups, look at the price action. It's not all about gains and losses all the time. It's more about learning through this process and navigating the markets. And I may be in some of these positions beforehand. That's why I always say that you need to manage the risk on from your perspective of your account. And if you haven't already watched the risk management video I have, and hopefully that will save you from a lot of losses in the future, and incredible lessons which I had to go through just to be able to profitable in the market. So let's go through what's going on in the market right now. Let's look at ES1. So ES1 is the S&P E-mini futures, and I'll look at this chart. We have talked about this. We go through this chart every other week. So we have been kind of in this falling wedge here, more or less. And then when you look at this here, this kind of we reverse from here right here because we were definitely oversold. So couple things I'm watching is, first and foremost, quarter end is coming up end of this month, right? So a lot of hedge funds and I guess other folks may be short covering, or maybe they just want to pump these stocks just because, just because to show their clients the gains, especially the long folks who are long on the market, and closing the books, and yada yada. So I think what might happen is we can see something like this happen again in the market, where we kind of like tap this trend line 4,000 level, start to consolidate here, and then fail back, and then possibly create a new low or after the quarter ends, and then come back down here, right? So next week I'm kind of watching price to kind of find where, like, if we break above 4,000, and if we we have a lot of resistance above that, like above 4,000 we have 4,800, sorry, 4080, 4170 was this level. So a lot of shorts and longs, a lot of longs who were trapped in this, right? They would have their order here for sell, right? 4080. So either way we are heading, I mean, price move here really fast, right? So can we see something like this? I doubt it. I think this is something like this here where we reversed and then we entered here and then we actually failed. So when you notice here, we had a very similar pattern here last couple of times. Bounce, fail, bounce, fail. So bounce, and then this was a bigger bounce, and let's see how much is this one. And as I told, right, we need to watch on the weekly time frame now. So on the weekly time frame, we actually, this, if you watch the SATI ATR pivot, right, we actually curled 921 EMA, which is called death cross, right, on the weekly. And every time we have had that, we have significant sell off in the market. We have had big correction, right, 20%, and then we had correction here 36% during COVID. And you can go back in time, right? So the question is, do we bounce hard from this level upcoming month like this, or is it more like a 2008 where we actually try to bounce? It's very similar here. You can see we had a sell off, and then we double bottom here, tried to create a new high market but failed, and then consequently we saw big sell off in the market. So which one is it, is the question you need to ask, and question is something I'm asking myself. But either way, day to day we still need to be able to trade and make some bread on the side. So these are the key pivots to watch. So right now, if you look at the futures here, we are kind of like on the daily chart we have this kind of doji. So we could see a like a choppy day tomorrow. Monday openings are usually slow days in the market. We could see a pullback and then continuation to the upside. That's what I'll be watching for, is a little bit of pullback and continuation, at least for a long perspective. And if we continue to rip like we did on Friday, yeah, this is the area I'm watching, around 4,000, somewhere around this resistance area. We'll see how market behaves. I mean, it could very well just break, so we are starting to see this kind of like a ABC correction, where this could be another, like, another leg down, and then finally we consolidate around 3,500, and then we move up. That would be the ideal case scenario for bulls. I'm not really expecting market to just create rally. There needs to be a positive catalyst, and right now there's nothing in the market. It's absolutely bad news. We had Russian default. Today was the news of the day on the sovereign debt, and then also mixed news from China, where we are seeing that President Xi Jinping like claims that he wants to support, but then their political party members are saying that we are hearing mixed opinion on that. So I don't know. I mean, with the China names, very hard to swing them. Always be hedging in this market. So with that said, let's watch at crude oil as well, because I'm gonna talk about Oxy. So crude oil had a nasty sell-off, right? And again, crude oil also EMAs curling down on this Sati pivot ribbon flip here was quickly bought up. So the question is, do we see similar move here, or does it get kind of rejection here and then oil crashes? If oil crashes, it's not a good sign for economy. In my opinion, 2008 when oil crashed, S&P crashed, it didn't rally. There was an initial rally, but then it failed. So oil crashing doesn't necessarily mean it's bullish for the market. Don't listen to everyone who is just telling you blindly that oil crashing is good for equities and tech sector. That's not the case. In 2008 we had completely opposite, so we need to rely on the price action, and depends on how aggressive the sell-off is. Energy is the most bullish sector in the market, or was the most bullish sector until last 2 weeks in the market. So if the most bullish sector in the market is pulling back, that's not really a bullish news for other sectors, right? It's actually bearish. We could see short-term pops, of course, but the trend is to the downside. I mean, so again here, so I'm watching for this 110 level here, which 110 to 117 is the level I'm watching on crude oil to see what happens there. So far it's holding this support area. We have had this acting as a support, so let's see what happens in the market. Overall, I think this is still a pullback, right? Since oil is so extended, it's extremely extended, so it's still a pullback, but still, we need to observe the price action. 110 is the key level to watch. Like if we can break above 111, I guess, like 111.5, 112, these are the levels I'm watching on crude oil. But if we break below 100, nasty. So, and real quick, let's go look at Dixie US dollar index. So dollar index has been consolidating for a while now. We have a clear RSI divergence, right? Higher high here, but then on the momentum it's lower low. Higher low. So but notice how it's been in this kind of pennant formation, unable to break 104. So it's kind of giving me those vibes that we are actually not going to see dollar move, even though the market is rallying, right? Even though the market moves so much. So this is something to pay attention, right? If dollar starts to pump, if dollar starts to move up rather than breaking down, could be bad for the tech sector in general, especially QQQ, right? So dollar is something to be watched. Anything above 105, bad again for the market. It does look like a cup and handle formation here, not going to lie. Dollar looks really bullish, and dollar is really bullish in the market right now. So shorting dollar, you need to wait for a break of 100, which is not really happening right now. Even though we had rallies in the market, we are still unable to break the dollar, even unable to break this level, right? Even 103. So keep an eye on dollar as well. So saying all that, now day to day we still need to watch some stocks based on some catalyst and stuff like that. So first one I want to talk about is Google. Now Google split is coming soon. And we have seen what happened with Amazon split, right? When Amazon split happened, we had a multi-day rally on Amazon, and then it pooped, right? Very similar. Google is looking like multi-day rally. We had a very strong day, 5% up, 100 points up on Google, and so we have a catalyst here. Chart looks good. I mean, if you break above this 23, tomorrow 2376, hoping we don't gap up. If we gap up, we need to reevaluate our trade plans. But either way, 2375 is a key level for Google. So this is a W formation. A little bit of consolidation here and then breakout would be ideal for me. But it's so volatile market could go. And 2500 to 2600 is something I'm watching on Google. And with the split is a catalyst. Let's look at the Google flow here real quick, just to show you guys that flow is also really bullish on Google. We have some sold calls. Obviously these were profits, but here I'm going to sort by time, sort by premium. I'm going to do this, and look at this. We have a lot of bullish activity. Let's go to our money here. So a lot of bullish activity on Google here. If you look at the chart perspective, we have 2400, 2420, 2350 as strikes. A lot of money in Google, millions of dollars, single leg, multi-leg orders. Overall, I think we gotta watch for Google. As a catalyst, it can go up. But if it breaks below, let's say 2250, right, then we have kind of lost the momentum, and then it's going down with the market. So either way, range is big on Google. Google moves weird as well. It's not really something I'll recommend for a day traders. It's more like a swing traders, and buy more time on this one, like these guys did 20 days in advance, 20 days. So Google is something I'm watching. Next one I want to talk about is Oxy. So as I talked about crude oil, so crude oil is really in a weird spot right now, because we don't know it's gonna break out or it's gonna break down, continue down. So same with Oxy, really weird spot right now. Oxy was also weak on that day when SPY was ripping, right? We had a inverted like a hammer here. So really bearish looking chart. But if we start to find bottom around 53, if we start to find bottom on Oxy around 53, and then we start to bounce from there, or if you find a bottom at 51 and then bounce from there, Oxy is the one where a lot of retail traders, it's crowded name, and Berkshire Hathaway is in there as well. So it's a good spot, good risk reward for long people who are trying to long energy and think that energy has more momentum to go. And a lot of investors, trust me, are there like that. ZOM got upgrades before the sell-off. So don't follow the herd mentality. Always think ahead. It could very well just continue the momentum down. People thought that steel would not do the same, but look how bad steel got wrecked here. But finally steel is looking decent as well. We had an inverted hammer here, inverse candle here. So steel could also see some momentum, but Oxy is the name with a lot of a crowded ticker with a lot of call buying going on Oxy. You can see flow is extremely skewed towards calls here, and it's basically calls only. There are some sold calls, but not a lot of put activity, right? Not a lot of put activity, and they're buying time with this. They're not like retail traders. They're buying time, but they're buying way out of money, but they're buying a lot of time, 300 days. So they're taking the risk by buying time. So I will suggest do the same. Buy some time on these. It's a long term swing play, in my opinion, not a short term rally play. We could see consolidation on Oxy for a while, but just wanted to show you that Oxy is a big mover, can move. So Oxy, Google. Next one I'll talk about is ZIM. So ZIM looks interesting only from a technical point of view now, is because it's starting to show signs of reversal. I'm a big fan of reversal play, and this is on a daily chart. We have a double bottom, previous support here, and it could fall to all the way to $40, not denying it. But let's say that you keep a stop of 45, for example, and you open some swing position here. The risk reward is good, like 52 calls look decent for 3 weeks out on this one with the stop of 45. So technical setup here, ZIM. I really like the setup, to be honest. Like on the 4 hour chart also, it's starting to hold this level, but if it breaks below 45, for example, we have all the way till 40. So I like the setup anyway, because it's like, you if it breaks down, great, you buy puts. Breaks up right here, you buy calls. Leaning towards reversal, especially if the market continues up. We definitely have signs of the distribution on this name, so anything can happen, but a technical rally seems to be a probable um, trade on this one. We'll watch it anyway. So last one I want to talk about is Tesla. Now Tesla is an interesting one. We have earnings coming soon on Tesla, 25th of July, so a month out on Tesla. And we do see some kind of consolidation before the earnings on Tesla, and run-ups usually are part of Tesla earnings, used to be at least, but now things have changed. But notice how the volume was dull, and now the volume on Tesla has increased. Notice this pattern here. Volume is increasing on Tesla in last couple days, and we have divergence on Tesla on the 4 hour, and then on the daily as well. You can see here the volume is starting to show signs of life. So what's going on here? Do I think Tesla will run? Well, it depends on where Tesla can break above this channel here. I mean, if market sees a pullback here, Tesla can come all the way back here and then rally, find kind of triple bottom and then go up. Tesla also was unable to close the previous high like Google did. Google closed above the previous short time frame. For example, here you could see Google had a very strong day with a lot of volume on 4 hour chart. But still we haven't closed. I mean, we almost closed above this, right? Above this level right here, 2356. So Google had a very strong day, but Tesla on the other hand, you can see, didn't really have a very strong day. Had a decent day, but not very strong day. So we could see this come back here and then move up. But if it breaks above, for example, 750 tomorrow or this week, 800 is in play, 790 is in play. But if it breaks above 800, that's when things can get interesting, right? Then we are talking about possible test of the upwards of the channel. So it could be a decent 200-point swing play on Tesla. So Tesla looks good, especially with the volume coming in here. Let's see what happens. So these are the stocks I'm watching, and the final one is PDD. So PDD, extended name, nonetheless, 4 hour squeeze broke to the upside. We have China economy, especially like Xi Jinping telling that he will consider supporting the tech names and consider supporting the economy by decreasing the interest rates. So guess what, if that happens, all these tech names will rally, right? So very similar setup to Baba, but I like PDD because it moves a lot in a day. It's definitely extended, so if it breaks below 64.7, it's possible that it can test 55 level. China names, you can never rely on them, right? So it's possible, always be buying dips on these. So if it's possible, it can retest 55 and then go up. So if you're planning to get long on this, either intraday traded, if you're buying swing plays, always hedge it. So for example, I'm looking at 75 call 3 weeks out, with 55 put or 60 put for this week as a hedge in case it gaps down, right? Anything can happen. So PDD also looks really good here, right? We had this kind of like a pennant break, but like SPY was really strong the other day, and PDD was unable to break this level. So I'm expecting maybe we'll see a pullback, but nonetheless, squeeze broke to the upside. Flow is really bullish on this name, along with Baba. So Flow is really bullish on these. You can see here we have way out of money calls. Again, they're buying time. Look at this important factor. When you put a lot of money, buy time. But this guy just went all in here. But it's a spread, right? Sold 80 calls and buying 75. So either way, buy time, manage your risk with buying more time. Your gains will be less, but you'll be much more comfortable holding through the volatility in the market. So these are the four setups I'm watching. Out of these, ZIM has the lowest, I think, really good risk reward, very low risk, high reward. And then Tesla is on watch. We'll see what happens. Google again, risky, but momentum is looking really good with some volume coming on Google. Really strong volume in the last trading session. And then finally, PDD, Catalyst, China names, very similar to Baba. It's been ripping ever since it broke out of this falling wedge. So consolidating here nicely. So we could see 75 on this one in 1 or 2 weeks. It's possible. Volume is also really good. Volume is increasing just like we saw for Tesla. So these are the setups I'm watching. And keep in mind that we could chop this week. Always be watching the SPY chart and ES chart. So ES1 is the important one, right? This is the one to watch. We could gap down, gap up. This can invalidate our trading setups. That's what it is. That's why I don't give levels anymore, because they don't make sense anymore in the market. But this is the trend line to watch. If we break above this, chances are we could test all the way this 4300 level, 4200. But we'll see what happens. Either way, we have divergences playing out. I don't think we have bottomed yet, but we'll see. We have inflation data coming, PPC data coming on Thursday. That's the one to watch, and that could possibly tell us what's market pricing in. If we see that inflation has calmed down, market could take as a positive news and send it. Either way, this is getting longer than expected, so be careful out there, and I'll catch up with you guys later. Ciao for now.